This conference will now be recorded.
Yet another mentorship invest session, Friday evening, 9 p.m. Indian Standard Time. We are on the 5th of Feb, 2021. A very warm welcome to all our mentorship traders. Thanks for joining in on time. A warm welcome to all the new community members as well. So we've had a pretty good week. We'll talk about the weekly performance of prices across Nifty, Bank Nifty, and few sectors, and what can we expect going forward. And post that, we'll talk about few medium to long-term investment opportunities which have cropped up on our scanners. But before that, let's take a look at the Nifty. Now, I have been at least consistent enough to share my take on the Nifty on a regular basis over various social media platforms, primarily TradingView and Twitter. And this is exactly the chart that I had shared yesterday. I have two channels on the Nifty daily chart. The blue one's been taken well care of. Close to that 14,900 mark was the upper border. Index teased the 15K mark in today's trade. This is the Nifty futures daily chart. And I have this wonderful rising red channel, which can provide us resistances at 15,200, 15,300 on the upside. Now, in a strong uptrend or in any kind of strong trends, divergences do not work as good reversals. They may lead to some consolidations, if at all, but they don't actually work so good in terms of reversals. And they work when you expect or you stop expecting them to work. Nevertheless, our work as analysts, as trade traders, is not to neglect any sign. That can be a sign of a confirmation of a trade or a sign of an alert. And there are a couple of signs on the charts. On the Nifty daily chart over here, as you can see, if I turn this into a line chart, we've got an intermediate divergence. This is RSI 9 down here. And we've got an immediate divergence also. It's like a double whammy, creating on the daily time frame. Now, what interests me further is, I think I have a 75-minute time frame here. Yes, this is the 75-minute one time frame lower on my charts, wherein I see the same similar divergence shaping up over here on the lower time frame as well. So this kind of behavior of prices across two different time frames tend to make the signal relatively stronger. What I mean is this kind of divergences should not be completely neglected. And so in Thursdays, that was yesterday's write-up, I had mentioned that we could see some bit of profit taking or sell-off, keeping in mind Friday, end of the week, traders, short-term traders would not probably prefer to take too many open positions over the weekend. And so I had written that we can expect some degree of profit taking from the day's high. And we did see somewhat, but not significant. Nevertheless, Nifty posted a positive close for the 5th consecutive session, and the divergences across both the daily and the 75 is intact. So a slip below today's low, which is for the Nifty future, is 14,866. Let's use 14,860, or to keep it round number, 14,850. So a slip of below 850 can lead to a bit of trigger for these divergences to work. There's another small thing that I would like to bring your notice to. I'll try my best to explain this. If you look at the last two candlesticks on the Nifty, you'd see that there is no overlapping of the two bodies. The body of today is the 5th of Feb, which is completely a tiny one. It's as good as a doji. Does not overlap with that of Thursdays. Now, when we get this kind of a situation, and if the next day, which in this case is going to be Monday, if the Monday's body does not overlap with today's, which is Friday, then we can get some kind of an evening star kind of a pattern, or you name the pattern or you don't name the pattern. What it suggests that there can be a top in the make. These are two a little bit of early predictions or a little bit maybe too far-fetched. What will happen on Monday, we will see that. But generally, you will notice that when at the top you get a doji like this and the bodies do not overlap, the next bar does tend to confirm what's coming up going forward. So Monday's candlestick or Monday's behavior, price behavior is going to be very, very interesting. If you look at one time frame higher, weekly had a, what can I say, exceptionally strong bounce back. Let me just start here. So we've got this channel breakout. Let me put it into log scale. Yeah, we've got this multiple channel breakout. We've got some degree of 1,000-point correction and equally strong bounce back. Now, quickly, when you look into the line charts on the weekly time frames, across most of the sectors and many stocks, you will find this kind of a divergence. Yes, it is indeed a divergence, but very unlikely to play out because you would find the weekly bar in this case to be exceptionally long. It's a range expansion. So it is a divergence, but it is a not tradable divergence. We cannot make much out of it. It's on the daily and the 75-minute time frame, which is a little bit more promising, I would say. So I'm going to be a little cautious at the beginning of Monday's trade, and we'll see how it plays out. There's another aspect to the 75-minute charts, which I have it here, is the volume profile, which I've plotted from the lows, the recent lows of close to 13,675 and the recent highs. And you will find that the point of control or max volumes happened yesterday at this level, which was close to that 14,900. Now, this is another thing that I have found over and over again, that when this kind of a situation happens, generally it leads to some degree of distribution. That is, traders use this this gap up, this high momentum move to book some profits, and that's why a max volumes happened up here. The latecomers or the short squeeze and the guys who actually took a long position down at the lower levels took it as an opportunity to exit. So nevertheless, bottom line for the Nifty going forward is we'll be a little cautious. Number one, Monday's price behavior is going to be important. If Friday's low, let's say 14,850 is breached, we can expect a bit of correction. We had a 5-day one-way high momentum move, so it should be healthy. It should be healthy. 14,700, 650. It's completely fine. We should be okay with it. That does not mean that the uptrend is over or the bull market is done with. We are too early to comment on that. The index which showed some really crazy move was the Bank Nifty, thanks to State Bank of India and other few PSU banks. But today we did see significant slippage or slipping from the intraday high, and we did find that in stocks like Bank of Baroda, State Bank of India. We saw that in Bandhan Bank, in RBL Bank. If you allow me to quickly take a look at the banking stocks down here, you'll find that this slip from the intraday high was across Bank of Baroda. It was in State Bank of India. We cannot complain the way it has moved. PNB was also one stock which slipped. So was Federal Bank, IDFC First. Kotak Bank did not. Kotak Bank exceptionally beautiful move up. We discussed this stock, I think, for the last 2 weeks. We've been discussing this. I hope you guys had bought into the 1700 levels. We've been talking about how good the supports are. It played out wonderfully. I thought that it will slow down a little bit here, that 1870, 1890 zone, but not at all. So Kotak was one which was holding exceptionally strong, did not slip. Apart from that, Axis slipped. Bandhan Bank slipped significantly. This was in our swing short candidate. If you have been following our morning emailer, the mentorship trade warm-up emailer, it has been coming for the last, I think, 3 days on the short swing side. iBank, not much. RBL Bank slipped significantly from the day's high. HDFC Bank held well, and then there was IndusInd Bank. Bank Nifty at a life high led this move right the way we would have expected, or more than that. Didn't expect that the Bank Nifty will go from 29,600 to 36 in just matter of 5 days. So no complaints, high momentum, strong one-way rally, literally vertical rally. It should slip, it should correct a bit. These are all healthy words or healthy corrections as we generally use these kind of jargons. And so even if the index slips down, it should be looked as an opportunity to do swing long trades. One should not look into this slip down from the day's high or the shooting star kind of a pattern as a sign of trend reversal. It can lead to short term. Let's take a look at the sectors, how they played out. This is the RRG charts on the stockcharts.com platform, which I use primarily for the RRG. So this is the 1 week price behavior. There will be no okay. So PSU banks, there'll be no surprise that right up there, it's moved into the leading. We'll look into the tail later, but just looking into the percentage change, all sectors positive, big bounce back from as low as little less than 3% CNX IT all the way up to 25% PSU bank, bank Nifty, financials, private banks. So that the pocket of the market which mattered the most in terms of weightage did the maximum contribution and gained also the maximum. The next pocket which matters a lot, we can look at the IT, is not performing. So IT can be an interesting, I think, space after a week or two when it might come as a sectoral rotation when the IT turn comes for a revival. We'll talk into that later. But now let's take a look at the tails. So if I can move into 12 to 13 weeks, and now take a look at the performances, significant performance from PSU Bank, 65%. All positive. So let's not look at the percentage change. Let's take a look at the tails. So real estate doing exceptionally good. It's got beautiful relative strength. The momentum is dropping a little bit, so we should look to buy on dips, not to chase them. PSU Bank, same thing. Of course, you're not going to chase at this level. Metals, few stocks have come off. We can see for the last 1, 2, 3 weeks, the momentum is dropping. The relative strength is definitely there. So we should not go bearish, but we should look for strong supports. And I think the stocks, if they come down, will give us an opportunity to buy. Small caps, mid caps, still there. Auto. Now, auto's picked up momentum. It has a decent amount of relative strength. So that this space can also be looked into swing long. So these sectors which are in the leading and doing well are the ones that we can look for swing long, that is buy on dips next week or going forward. FMCG and consumer, if you are following me closely in these weekly videos, I've been talking about FMCG and consumer will pick up, and they have picked up. We've seen the way FMCG has broken out, especially ITC. Hindustan Lever did manage to give us some bounce back to today, but it needs to do far more, especially when we compare it with ITC. Energy, interesting. We'll take a look at which are the stocks that can play a role. Reliance, it's not much happening in that at that end. Apart from that, in the blue quadrant, which is improving, the one that will matter, I think, would be FMCG and consumer. So do keep a close watch on that. It has started to play off, especially the way ITC moved. If you look down here, which is the weakening. Now over here we have the private sector banks. Thanks to that recent 1,000-point sell-off, we have few stocks like Kotak Bank and the others which came down, and that's why they have come into the weakening. Now this does not mean that they are going to underperform. Weakening means we've got decent amount of relative strength. It's the momentum which is weakening, okay, which means that either it will travel like this or it will do like this. My sense is the way the banks have moved, it's not going to go to the lagging right away. It's not going to maybe go to the lagging sector. So we can continue to look for long trades on dips. We can also see the shift coming in. Now that the PSU banks did exceptionally good, we can see the private sectors probably will hold the fort going forward. So keep a close on the private sector banks also. Pharma. Now pharma it's not done much. It's completely range bound. okay, with few stocks like Biocon, which sold off significantly. But this has been in the lagging for quite some time. Now it has started to pick up momentum. These are the early signs of possible revival, which means that they can go into the improving quadrant, which means that momentum is really good and maybe go to the leading, but that's far-fetched. As of now, I think pharma is a mixed space and one should be very, very careful and choosy about the stocks. Then they are not doing much. If you honestly ask me, the way I say stick to State Bank of India when it comes to PSU banks, I would suggest stick to Sun Pharma when it comes to pharmaceuticals. I'm talking primarily from a trading perspective, not investment purpose, from an investment point of view. So I'm going to keep a close watch on these sectors, on this which mattered the most, the banking. I think they will stay volatile. They will continue to give us opportunities, and the FMCG space. IT will be interesting, but I guess it's going to be a little later on. I'm going to quickly take a look at the IT stocks and then we'll go to our usual discussion. So if I take a look at the primary IT stocks, and I have the daily, or if you allow me, I can make the left one weekly and the right one daily. This is going to be will give us a good perspective. There you go. So if you notice, IT is probably on the, especially this is a chart of TCS, we'll see this in most of them. 1, 2, and the beginning of the 3. So IT is probably decided to go through a multi-leg correction, maybe. So this is TCS. This is Infosys. We see that clearly it's a multi-leg correction from Infosys. HCL Tech, clear there as well. Tech Mahindra, same story. Mindtree is very similar to TCS in terms of their multi-legged correction. Wipro is also up there, and Coforge. So I track the stocks which are there in the FNO. My list is primarily of all the FNO stocks. So coming to the IT space, what I noticed that this sector, these stocks which led the move before 2-3 months back, and they did exceptionally strong. The way they moved up, if you remember, in the months of September, October, and then again in December, is now going through a serious correction, a complex correction where it's more than one leg. And so they will give us a landing, as in they will land close to the previous lows, a little below that, and it will slow down. Once the selling slows down, it will give us an opportunity on the bounce back. That is when I think the outperformance of the banking, current outperformance of the banking will slow down, and the shift might straight go to the IT again. And in that environment, we can have weakness from the overall benchmark Nifty. If this expectation holds true, then maybe it will take another week or two. Depends on the price behavior, depends on how the market behaves next week and the next. But overall, I'm going to keep a close eye on the financials, the FMCG consumer durables, and a revival. We'll look for IT later on, and then pharmaceuticals maybe. All right, so that's it for the sectors and the index. Let's now talk about what are the investment opportunities that we can pick at the close of this week's trade.